And sticking with the business theme, let's go now to our business editor, Giles Beckford. Giles, so the coronavirus pandemic, it hasn't been bad for everyone. Tell us about AFT Pharmaceuticals.
Well, this is a small Auckland-based company which is best known for the Maxigesic painkiller, but it has a wide range of antibiotic products and vitamin supplements. And as, of course, the lockdown, as the pandemic grew worse and the implications of it dawned on people, of course, people moved to buy products that they thought would be better for their health, for their body. So, for instance, AFT Pharmaceuticals found one of its line of products. It sold 20 times more in March, in fact, in part of March, than it did the year before. And it just goes to show how much its products were in demand. It's been lucky that it's had a refinancing of its debt, and it's actually cut its interest rate costs. And there's another example of how lowering of rates has helped companies. So what the company has reported today was a $12.7 million after-tax profit. In the scheme of things, no big shakes. Last year, it was a couple of $1 million loss. Sales went through the roof, though, up by more than a quarter, to about $114 million. So it's one of those companies which has done well out of the pandemic. It's emerging stronger. The people there, they're pretty low profile. Hartley Atkinson is the chief executive, and he tends to play things down a wee bit. He just said to me this morning, it's business as usual. We've got a lot of products in the pipeline and we'll just get them through to the market. But they're looking pretty chuffed about it, and with good reason. I think Fisher & Paykel Healthcare will be another company that we'll hear about in the not too distant future, which will also show the financial benefits of the products it sells and how they've benefited from the COVID-19.
Giles, also the Reserve Bank has been talking to people while surveying them about the level 4 lockdown effects. What have they found out?
Well, it quietly touches base with around 1,000 people. It's done by UMR Research on their behalf. It's their way of just sort of keeping in touch with grassroots expectations. Normally, they just ask a couple of questions about inflation expectations and what you think is going to happen to house prices. But this time round, they added a couple of questions. They asked people, how anxious were you about perhaps missing a mortgage payment? And the result was that just under half of those surveyed were a little bit anxious about perhaps missing one or two mortgage payments, but they were looking towards some sort of mortgage holiday in one form or another. They asked people who rent properties how they felt, and about 60% of those surveyed said they were anxious to some degree about missing out on a rental payment. Of course, among the measures that the government brought in for the COVID-19 was a rent freeze and basically protecting people's tenancies for a while. But interestingly, in both instances, the most anxious were in the 18 to 29 year category. And the third question, extra question they asked was, how anxious are you about whether you'll keep your job? And in the context of that package, we were just hearing from Emma Hatton about Fletcher Building, a very relevant question. And the upshot was just under half were worried about holding on to their jobs over the next 3 to 12 months. And once again, the youngest age group is the most concerned. And I just did a very quick tally before I came on air, and we've had taking into account the latest comments from Air New Zealand or prospects from there, we've had more than 3,000 job losses announced in the past week to 10 days. So there's a magnitude there of the way the pandemic is hitting business and the consequences of it.
Yeah, those numbers are the gritty end of things. Speaking of numbers, let's have a quick whip around the markets.
A bit of a do-nothing day for shares locally. It was generally negative through much of the session. Improved slightly to the end, but just down 3 points, 10,789. On the currency front, Kiwi 61.1 US cents, a bit stronger there, 93.2 Australian, and still stuck around 49.8 British pence.
Thanks, Giles. That's Giles Beckford, our business editor, crunching the numbers for us today.